Welcome back. Hope you've had a good midweek holiday and you're all rested for Friday's trading session. Well, we have told you about the index and we're likely to start off in the green with a gain of close to around 30 points. That's adjusted. Our research team, though, is standing by to get into the stock-specific action with CNBC-TV18's top stocks for the day. Well, Sonia, you go first. Tata Motors, how are the numbers?
Well, I'm going with bright green for Tata Motors because this is the first time Tata Motors has reported a profit in the last 2 years. And I think that's a milestone considering that they've been struggling for a while through the course of the pandemic. Now, JLR has achieved a positive free cash flow, and that was the guidance that the company had given out, which they have achieved now, which is a big thumbs up for them. 490 million pounds is the positive free cash flow. If you look at the consolidated numbers, revenues have gone up about 23%, core EBITDA has gone up about 53%, and the company has reported a net profit versus a loss of 1,500 crores, which is a big bump up for them. Now, in JLR as well, very strong numbers coming through, largely because A, their products are doing quite well, and B, the supply side challenges have, receded now. So the production of their fast-moving Range Rover, etc., has sort of improved, and hence they could cater to the demand. The company, though, remains cautiously optimistic on the demand situation despite the global uncertainties, but I'm going with bright green over there.
Okay, all right, bright green on that one. Let's focus on a couple of other names, though. Ekta is joining in to tell us about Dr. Reddy's. Ekta, how are those numbers?
Thanks for that. Well, yes, Dr. Reddy's, was a big beat in terms of what they reported. The revenue was up 27%. Street was anticipating around 11% growth. Margins came in at one of their all-time highs at around 29%. Profit at over 1,200 crores. Street was anticipating around 800 crores plus. US sales $370 million versus $344 million in the previous quarter. India up around 10% odd. All of these parameters stood up well for Dr. Reddy's, but estimates are that Revlimid generic contributed the most at around $120 to $130 million versus estimates of around $30 to $40 million. So that was the big beat. Analysts going forward are worried about what exactly the India business will look like, because a large part of it was contributed because of licensing income as well as acquisitions, and going forward what the US business will look like as well, considering that Revlimid generic has been the big growth driver. Stock-wise, valuation-wise, remember stock is down around 9% from its 52-week high. So maybe there is some amount of room for upside. The ADR was higher in the past 2 days as well, but there have been a couple of downgrades which have come through. So maybe we could start in the green, but I wouldn't be surprised to see Dr. Reddy's in the red today.
Okay, thanks a lot for that. Well, it has been subdued for the last few months, but Bajaj Auto is the one that could really kick it out of the park this morning. Very good set of numbers. Despite all the global challenges and the export challenges, earnings were better than expected. A record high EBITDA is what Bajaj Auto delivered. The revenues went up in low single digit, but the standout performance really was the EBITDA. A strong margin beat. It was a growth of 390 basis points year on year and up for the second consecutive quarter. Now, the company said that a couple of factors aided the margins this time. It was judicious pricing, better dollar realizations, and a richer product mix that aided the numbers. But more importantly, they're looking to work on their gaps quite a bit. So their EV portfolio, in which they have the Chetak currently, they're looking to expand that portfolio aggressively. Chetak has a 4% market share and they've sold about 10,500 units per month so far. 10,500 units in Q3 so far. They are looking to sort of gain their market share in the coming quarters. Lot of upgrades. JP Morgan has upgraded the stock. Jefferies has raised the target price to 4,300 and raised the FY23 EPS as well. So I'm going with bright green there too.
Okay, all right. Let's go back to Ekta. Ekta, tell us about more pharma numbers, Cipla as well as Torrent Pharma.
Well, yes, Cipla, came out during market hours on Friday, so it will be reacting to its conference call takeaways, and there have been delays in some of their key drugs for the US markets. For example, the cancer drug Abrixon generic is now estimated to launch probably in Q4 of FY24. It is delayed due to the facility Goa, which has current US FDA issues. The inhaler Advair generic, the target action date is now April 2023, so there is a delay there as well. And the company is aiming for margins of at around 21 to 23% for FY23. So maybe that should help in terms of possibly cushioning some amount of downside. Incred has downgraded the stock to hold from add. Bernstein has an outperform, but they've said that the company has missed estimates. Torrent in line, revenue was up 18% odd, margins 29%, profit 283 odd crores. India, which is their mother market, was up 17%, but this was inclusive of recent acquisitions. US was up around 24%, so that did well too. Largely an in-line set of numbers for Torrent. Cipla, we could see further downside.
All right, thanks a lot, Ekta, for that. Well, Tata Elxsi is the other one that will be reacting to its numbers. Reema's here to give us the latest. Reema, over to you.
Thanks so much for that. So revenue growth is slowing down for Tata Elxsi. This quarter, revenue growth was 3.5% in constant currency on a quarter-on-quarter basis. And the track record will tell you that this is slowing down. A couple of quarters back, its revenue growth was more than 7% on a sequential basis. The reason is the company has said media, telecom and the healthcare business is seeing an impact of delayed decision-making, furloughs and short quarter. By short quarter, they mean fewer working days. So media and telecom is about 40% of their revenues. That was down 2.5%. Healthcare is about 15% of their revenues, and that has declined nearly 2%, which basically means 55% of their business, which is media and healthcare, is under a bit of pressure. The balance one is the automotive, where we are seeing strong growth. Margins have fallen year on year, but flat on a sequential basis. Morgan believes that cost normalization and ESOP cost will keep margins under check in the future as well. The profit has seen a jump up despite a year-on-year decline in the company's margins on the back of a higher other income. So profits are up 29%. But because growth is slowing down and its valuations are higher than peers, I'm going to go with red for Tata Elxsi. Back to you.
Okay, let's go across to Mangalam now. He's tracking Patanjali this morning. Mangalam, over to you.
Well, so Patanjali Foods, quarter on quarter, there has been an improvement in the overall margins. That's because the palm oil situation has improved and they're off their high cost inventory. However, year on year, there continues to be a bit of a problem because of the decline in prices and the company having to pass on those price cuts to the consumers itself. We've seen a revenue growth of 26%. And, year on year, the EBITDA margins have collapsed by about 170 basis points. Net profit, as a result of which, has grown slower than the revenue at a 15% uptick. If you just take a look at their segments, the oil business has shown a revenue growth of 15%, but the operating performance has declined by about 39%. The mainstay of the company, or the main focus of the company, is the foods business, and they've also added, the Patanjali's food division. This is the second quarter running. So year on year, there's a 3x jump in their revenues and 4x jumps in their profits. However, what may worry the street is the quarter-on-quarter slump in their foods margin, which is likely to be the margin driver of the company. From 25% in the second quarter, the food margins have dropped to around 10%. So management commentary on that will be extremely crucial. Until then, expect the stock to be under a bit of pressure.
Okay, thanks a lot for that. Well, the other stock we're looking at this morning is the Maharaja Batteries. Very good numbers coming through. Revenue growth of 12% for the company. You've had margins which have gone up 310 basis points year on year. The EBITDA, core EBITDA, is up almost about 40%. So I'm going with green over here. And profits have gone up 52%. The important bit is management commentary is very strong. They say that in the automotive sector, they've had very good volumes, both in OEMs and as well as the aftermarket segment. The industrial battery volumes also witnessed strong growth, especially from the telecom segment. Now, apart from that, they're making big strides in the electric vehicle space. They've seen in the lithium-ion battery packs and chargers, which are used for electric vehicles, they've seen considerable volume growth there, and they're moving very quickly in EV-related businesses. They have the Gigafactory and the e-hub development work, which continues. Chargers and packs continue to see very good traction. So this is another EV play, and perhaps, the stock would be in the green post good numbers.
Okay, all right. Well, that one expected to open up in the green. But Sonal is joining us to tell us about DLF as well as Dixon Tech. Morning, Sonal. Dixon was the big worry. I mean, it's a disappointing set of numbers.
Oh, it is. Definitely is. I'll speak about those numbers, but let me start with DLF first, Nigel, because it was a good set. If we talk about their residential bookings, they were up 22% on a YOY and on a sequential basis as well to come at 2,507 crore rupees. For 9 months, they've done bookings of around 6,600 crore rupees. They had earlier targeted 8,000 crore rupees. So looks like they'll be able to surpass that guidance as well. 89% of their bookings came in from new projects and luxury projects as well. Their collections were up 12% on a sequential basis as well. They have been able to reduce their debt by around 120 crore rupees, and rental revenues, that is the DCCDL business, there as well, revenues were up 16% on a YOY basis. But Dixon Tech, of course, the big disappointment that came in, it did not meet expectations at all. Revenues were down 22%. EBITDA, yes, it was up 8%. Margins were at 4.6%. Profits also 13%, but it was lower than what the street was working with. Additionally, the management has cut revenue guidance for FY23 to 12,000 crore rupees to 12,700 crore rupees versus 15,000 crore rupees earlier. So that's a big cut in guidance as well. Expect the stock to be in the red today.
All right, and we will, of course, try and get more details on that, so stay tuned. But very weak numbers coming in from Dixon Tech. In case you missed out on any of these stocks, here's a quick recap. Stocks with positive news flow, there's Tata Motors, Dr. Reddy's, Bajaj Auto, Torrent Pharma, Maharaja Batteries and DLF. While stocks with negative news flow, there's Cipla, Tata Elxisi, Patanjali Foods and Dixon Technology. But the other big internal we're tracking is what's happening in the world of crude, and Brent crude is now back above $88 a barrel. Manisha Gupta is joining in to give us a quick roundup of all the action there. Manisha, there's the big US FOMC meet next week, so all eyes will be on that. But tell us, how is the commodity market shaping up?
Well, the market's clearly watching out for that meeting. But, yes, industrial commodities have continued to gain up. Crude oil prices trading firm. China demand pickup is one factor. But apart from that, it is about the U.S. refinery run, which has seen a decline. There has been unplanned outages as well, which continues to weigh on. And while 1st Feb is the Fed meeting, it also is the OPEC and allies meeting on the same date. And then the European Union and G7 are set to broaden the price cap on Russian refined products on 5th of Feb. So the 1st to 5th of Feb is going to be quite important when it comes to the crude oil prices. But a very sharp decline is what we are working with for the U.S. natural gas prices. That one is trading at a 21-month lows, and we have seen a decline of 30% already in this year until now.
All right, Manisha, thanks very much for that. So that's crucial to watch. We'll take a quick commercial break here, but some fundamental stock talk. Saurabh Gupta of Dixon Technologies is the first corporate which will also join us on the show. The reported numbers. Prakash Diwan, of course, is our market guest who comes up for market talk. Stay with us. Coming up.